is Steffi and welcome to the FinancialFox. Today the show is a panel discussion about tokenization of real-world assets. Joining me is Mark Child, CEO at Condor Gold. He has been on the show a few times. We've been discussing tokenization of gold, and today we are taking a little bit broader because we also have Luc Falempin. He is the CEO and founder of Tokeny. So, tokenization of assets is a big deal and is set to become a multi-trillion-dollar industry by the end of the decade. A report actually suggests that tokenization of globally liquid assets could be a $16 trillion industry by 2030. Those are massive numbers, and we see big institutions like Goldman Sachs, Almington Lane, Siemens, among many others. They are choosing to represent real-world assets as digital tokens on a blockchain. So we are going to dive a bit deeper with my guest on this discussion today. But before we get into this discussion, remember that this channel doesn't offer any financial advice, but is for informational purposes only. Any research, any due diligence is all down to you because it's your capital that is at risk. Finally, if you're not subscribed to our YouTube channel, click the subscribe button now and follow us on social media to stay up to date with our news and interviews. Hi, Luc. Hi, Mark. How are you?
Yeah, hi. Hello. Thanks.
Yeah, so it's great to have you on the show. Today, obviously, we are talking about tokenization. And I've got an expert on the call. Luc, you are the CEO of Tokeny, so I'm sure that you can tell us a little bit more about it. And then we have got Mark Child that we had on the show previous time, coming from more a traditional finance perspective with a lots of questions that we want to ask and we want to investigate. So recently Citibank released a report saying that it's betting on the blockchain-based tokenization of real-world assets, set to become basically the next killer use case for crypto, putting some big number like multi-million-dollar industry within a decade. So those are kind of big numbers. Shall we maybe start with a round of introduction, starting with you, Luc, if you can also expand obviously on your background, but also on what Tokeny does.
Yes, sure. And first of all, thank you for having me today. And indeed, the report from Citi is very interesting. It's 162 pages long, so it's quite something to read, but very interesting. And I think it proves as well the point that tokenization is coming. It's indeed we see more and more traction in tokenization. At Tokeny, that's what we do. We are a tokenization platform. So we are a technology provider. We're not an operator. We only provide the technology in white label to help financial institutions, mostly large financial institutions, to represent their assets on the blockchain, so to tokenize assets in a compliant way, because it's quite easy to create a token, but to create a token that is permission, controllable, compliant, it's another story. So we provide a full set of tools to do that. So to issue, to manage, and to transfer compliant securities on the blockchain. And we do this since 2017. Almost 6 years now. So we saw a lot of different type of projects, let's say.
Mark, do you want to?
Yes, certainly. I have a background for 20 years in finance, both sides of the fence, and as an institutional stockbroker, research, then on sales, and then running a company, and then into private equity and fund management. That was 20 years. And last 15 years, I've been involved in gold exploration and development. I run Condor Gold, which is TSX name listed. We've got 2.4 million ounces of gold in Nicaragua. We've done the final bankable feasibility study. We've got the project fully permitted to construct and operate. We've cleared all the site of 14 hectares. We own all the land, and we brought a mill into the country. So we're at that stage where we're construction ready, if you like, and it would take 18 months to build. And one of the things I've been looking at is how to finance that upfront capital cost. And one way to actually do that is through a gold-based token loan. So we can come on to that.
Okay, I think that's the perfect point where we can start to dive a bit deeper into how do we actually tokenize assets like gold and silver, perhaps?
Yes, sure. So, as I was saying before, we're not an operator. We are simply the tech provider. So, basically, before you tokenize an asset, you need to have something to tokenize. So if you want to tokenize securities, you need to create your securities. So to have your proper legal documentation, to know what type of investors you're targeting, from where you're issuing, etc., etc. So it's not always simple to create a financial product, and it's not simple to distribute it globally, because with blockchain, everything becomes global and worldwide, but regulation is a bit more complex. Especially for securities. So first you need to know exactly what you tokenize, meaning, how do you package your asset in a financial product to manage co-ownership and to protect the different stakeholders, because you have rights and duties. You have rights for investors. You have the issuer is liable with these investors. So you have to set up all of this to define all of this, to structure your financial product. And then you can tokenize it, meaning issuing a token representing this security and making sure that this token is powerful enough in order to control the full life cycle of your securities. So it really depends what you want to represent on the blockchain, but first you need an asset structured in the proper way in order to tokenize it.
So that will mean, if we go back to the question that Mark has, which is perhaps looking at the opportunity to raise funds through tokens. And obviously he has got a mine with gold, he has got shares listed on the stock market. What will be the right approach to take to find an alternative solution for him for the company to raise capital using tokenization?
So I think gold is a very good example, because there are maybe 1,000 ways to tokenize gold, because there are 1,000 ways to represent gold with financial products or directly. So we actually tokenize gold already in different ways for some of our customers. And sometimes it's a gold directly. Sometimes, most of the time, it's with debt tokens or loans. Sometimes it can be equity of companies owning this gold. It can be very various ways, funds as well. We tokenize a lot of funds. So there are many ways to tokenize gold. That being said, you have two big types of securities. You have private securities, private market securities, and publicly listed securities. For publicly listed securities, so listed on exchanges, usually you already have some kind of liquidity and some accesses to investors. A small number of investors, but usually powerful distributors, the members of the exchange. So you already have an infrastructure, the exchange, bringing infrastructure, compliance, and the audience. So it's quite costly. You have intermediaries, but it works. We see blockchain mostly useful for private markets. So for the financial products that you will not necessarily list on these exchanges, because it will be too costly and too cumbersome in terms of regulation and reporting, etc., etc. So it's mostly for private markets, where you will be able to represent digitally your securities. And because the whole process is digital, you can, in a simpler way, you can distribute the securities and manage a high number of investors. If you manage everything on paper, to manage 1,000 investors, it's quite complex, and you have no fund servicers that will want to help you. If everything is tokenized, in a few clicks, you can manage just 1,000 investors to mint new tokens, to perform redemptions, to do all of the operations you need during the life cycle of the asset. So basically, tokenizing is just a way to digitize the whole process, the investment process, eventually the redemption process, and all of the corporate actions that can happen in the meantime.
I have a question about if we are looking at tokenizing financial instruments such as a convertible loan or a debt instrument. So obviously you make it kind of like more transparent, more efficient, than traditional ways, because you can still do that now. You can always list a bond if you want, or you can do a convertible. You can do a convertible to raise funds. But I see that perhaps that could be a very interesting way to use tokenization and to use blockchain. I'm not sure, Mark, what do you think? But it seems to me that this could be a very interesting instrument for a company to look at.
Well, if we just take a step back on tokenization, if you look at Tether's a blockchain, but it's also issued USDT, so the US stablecoin. So Tether was set up in 2014 as a blockchain for fiat currencies. So those fiat currencies, like the US dollar, have now been digitalized or tokenized. The tokens in circulation under Tether are $80 billion today. That's just enormous. If you think about it, it's all one-for-one backed, they say, at Tether, if you look on their website. And they're doing that in other currencies as well. They're doing it in euros. In euros, I wrote down the number just before this. There's $36 billion in euros. In yuan, there's about 20 billion. And in gold, there's about $500 million tokenized. So about the numbers of just on 246,000 ounces of gold. So Tether, but the Tether USDT works across multiple blockchains. If you look on the website, it actually goes across 9 at the moment, including Ethereum and Tron and the big blockchains. So this provides liquidity outside of the fiat banking system. And I think this is part of the point about blockchain, is it's getting outside of the banking system, which is perhaps there's been a flood into that with the recent banking crisis in the States and Switzerland, for that matter. So I think from the gold perspective, there's going to be winners in a liquid digital gold, and at the moment that looks to me as though it could be Tether Gold. And I wouldn't be at all surprised if, looking out 5 years or more, that sort of 500 million in Tether Gold digitalized today has another zero or 2 zeros on the end of it. It becomes 5 billion or more. So I think that's a great example of digitalization working and available to everybody.
I think that's a great point, picking up what we discussed in one of our previous shows about gold token is really like stable coin.
Well, gold's a $12 trillion currency, so it's different from what Luc's saying about a sort of an unquoted private company, which you might want to digitalize an asset. It could be a manufacturing business or a property. That's different. I'm saying actually on something you start with a bigger picture of gold tokenized. And I think the future of mine finance going out is actually to borrow in Tether Gold effectively. So as you get a broader use of Tether Gold, there's nothing to stop somebody coming along and saying to Condor, we want to construct a mine. We can go to a bank, we can go to a royalty company, a streaming company, we can go to a traditional gold loan company, or we can go to somebody who says, look, we'll provide you with $50 million worth of, $100 million worth of Tether Gold. We can have a drawdown facility. We'd be very happy because it's 1-for-1 backed and the gold's held in Switzerland. And you can redeem it actually in Switzerland. Anywhere in Switzerland, you can redeem it. So we'd be very happy as a listed company to take something like that because there's some liquidity in it. It's backed. It's tried and tested through 80 billion. The blockchain system there is tested through $80 billion of US dollars, stablecoin backed. And I think that could well be a future of it. It's not yet been done. There's going to be hurdles to jump over there, but in terms of constructing mine finance, I see that as a way forward for the industry.
I think it's a key point, if I may. Tokenizing for the sake of tokenizing, it's totally useless. It becomes interesting to manage the life cycle of your tokens, but also and mostly to bring new forms of liquidity or new distribution channels or everything around DeFi, basically. What you just mentioned, Mark, about collateralization or borrowing. I mean, we see more and more lending protocols on chain, and indeed, gold has a price and it's quite liquid, so you can automate a lot of operations and take the same principles that we see today in DeFi with crypto, when the underlying asset is crypto, where you can automatically liquidate positions and that kind of things. Based on events or when the borrower didn't pay back or that kind of thing. So we can really automate operations and bring real-time finance with assets like gold.
So how do you actually work with your, you mentioned before with your clients, you mentioned before that you are tokenizing, you're already doing tokenization of gold. Give us some example or some case study.
So we have two main companies working in with commodities. The first one is Enegra, the EGX token. I think it's $14 billion of valuation tokenized, something like this, according to their data. So we tokenize the equity of the company, and the equity own a lot of assets. And also we work with MetalStream. MetalStream is another company, and they tokenized palladium, a lot of gold, different commodities. A bit more directly, it's not the equity directly; it's more like debt tokens, if I'm right. So on our side, technically speaking, it doesn't change anything. You create the tokens, you set up your rules, and you manage your tokens. But behind it depends what you sell to your token holders and what time of guarantee you give to your token holders.
Could I ask on that, for example, just like MetalStream or the others, is it possible to, I guess it is possible, but have you seen it, where they're able to offer a yield on the token, so a dividend, if you like, coupon or such on the token?
Yeah, so they're working on it. It's not live yet, but yes, they're working on it. And I think it's where it
could become very interesting, because no metal, whether it's a precious metal of gold or whether it's a base metal of copper, actually yields anything. It's just a metal. So if you could, it could be much more attractive as an investment if you actually had an income.
Indeed, it will be a security, but now there are ways to do security tokens in a compliant way and to do DeFi with these compliant tokens. It is totally possible. You need to do it a bit differently with a white list of eligible token holders. Cannot be for everybody. You need to define your rules and to make sure they are enforced, but you can do it. So that's why it takes a bit more time than standard TRC20 tokens, but we can do it.
My question would be, let's say that you can actually, you issue a token and then you think about a way with perhaps putting in some DeFi where you can actually get people to earn interest. Now, how public market will take that, Mark? And Luc, you as well, because you're probably working with like a company on public market. The question would be around, can you create an infrastructure that is going to be feasible or compatible with the public market?
That's to me first. The first thing you're going to have to do is go through your regulators, the people who are regulating you. So the first move on that's going to just have to go through a huge educational system, I think, with the regulators, and aim on the nomads and so forth. And that's going to be legal, massive legals, and not even sure it's permissible as on securities as such. In terms of a debt instrument, if it doesn't touch the equity, so the shares, and you've got your market cap and your shares and so on, so if it excludes the equity and it's debt to finance something, I see less of a hurdle with it, because you can ultimately go to the shareholders and get shareholder approval for that. That doesn't change the equity. The regulators tend to be concerned about protecting, if you like, Granny Smith and the retail shareholder as their main focus of protection, rather than the debt providers. To listed companies.
So the debt could be...
it could be totally, and it could be unquoted. And most debt's unquoted, and it's just lent from a bank. It could be Société Générale in Paris or whoever, BMO. So it doesn't matter. You're just going to, as an executive management team, say, we want to borrow X amount. And as long as you've got the shareholder permission to do that, either as an EGM or prior permissions, you can probably go ahead and do it. But you need to still run it past your regulator, because it's not been done before. Otherwise, if they wake up and read about it in the newspaper, they're going to be upset, and then ask loads of questions. So it'll be subject to regulatory approval, which is a potential hurdle.
Luc, do you have any experience that you can share, maybe on some kind of regulatory hurdle that you had to deal with, and how you actually put together a solution or you got around it?
So for the last 6 years, we spent a lot of time with regulators all around the world to explain that it is possible to bring compliance and control even on public blockchains by controlling the smart contracts and by adding features on the smart contracts to make sure that the issuer of the token and the financial product or its authorized agents can perform any compliance operations that they need to perform. So the first one is KYC obligations. You need to know who are your investors. So you need to know who are your token holders. So you basically need to track ownership of your tokens even on public blockchain. How do you do this? We fix that with on-chain identities. So every investor gets an on-chain identity, and we whitelist this on-chain identity. So if you have not been identified, you cannot receive these tokens. That's technically impossible. So that's just one of the components, but we also have other features like a recovery process, for example. You cannot lose your securities. It doesn't exist. Normally you have a custodian or providers, registrar who say, okay, you have your securities, you're the owner. So it's not because you lose access to your wallet or someone steal your private key that suddenly you don't have your securities anymore or is a new owner or things like this. So we have a recovery process and we have different functions and agents who can perform operations on your tokens, even if they don't control your wallets. So all of these features are mandatory in order to tokenize securities. And when we explain to regulators that we can do all of these things, and we know exactly who is doing what, who is responsible of what in the value chain, they are totally fine to consider that security tokens are securities, and that the only thing we ask for is okay. We are doing securities just in a digital format. And most of the time, the token is not the security itself. It's just a representation of the security. The same way you could use Excel for your registry, you can use a blockchain to track the ownership of your, to track your cap table. So actually, in most jurisdiction, you can tokenize securities very easily.
I mean, it raised question about security, because you could get hacked, for example, and the token can just disappear. How do you protect custom? Because I understand the point about white labeling, right? Only if you are white labeled, then you can receive the token. That's fine. But what about getting hacked? What about you lose? Which is what happens on public blockchain all the time.
So if you lose access to your wallet, as long as you can prove who you are, so your identity to the issuer or his custodian agent, you will be able to recover your tokens. Because via the smart contract, the issuer or his authorized agent can move your lost tokens to a new wallet. And on-chain, you are still the owner because you have an on-chain identity and your wallets are linked to this identity. So actually, your wallet becomes just a pocket. You can move your tokens from your left pocket to the right pocket, but you're still the legit owners of these assets. So you need the full technical framework to do that. So it's not that simple technically to enforce compliance, but now there are solutions.
So who are the partners, for instance, on the identity point that you are working with? Because you mentioned about BPM ecosystem, so I guess that you have a few partners you work with.
Yeah. So technology, what it does is to take the compliance status, the KYC status, for example, that you have made, and to bridge it with the blockchain. So we had a proof on the blockchain that this person has been verified. Or you verify the investor, it depends on your own KYC process and your own KYC providers. So we have an onboarding solution that we can provide, but some of our clients use their own, do their KYC on their side, etc. So you can use any KYC solution to automate operations, or you can do this internally, or you can delegate to a KYC agent. It doesn't matter. The same process than usual when you deal with investors, except that at the end you had a proof on the blockchain saying, okay, this person is authorized for this token.
And do you provide the wallet, or people can just use their own MetaMask, for example?
So it's compatible with any ERC20 wallets. So our framework of token is named ERC3643. It has been given by the Ethereum community, so it's a bit complex as a name, but it's retro-compatible with ERC20. So any wallets can hold these tokens. So issuers and their agents need wallets to sign blockchain transactions, like minting tokens, burning tokens, recovery, freeze, block, many functions like this. And on the investor side, they need wallets to receive these tokens and eventually to transfer these tokens. So they can use any wallet they want, but more and more we have issuers who want to dynamically generate wallets for their investors, because most investors have no clue about what is a wallet and how to operate a wallet.
When we look at the liquidity issue, that could be fragmented, could be really there is not much liquidity. How does Tokeny look at the liquidity problem, and how do you not create more liquidity, but make sure there is liquidity for the token that you create?
Yes, so the main thing is that for private markets, we try to reduce the illiquidity cost, because most of the time you have absolutely no liquidity for your private market assets. So we try to make sure that you can find a few potential buyers to drastically reduce your liquidity cost. So it's not about high frequency trading, it's more about reducing the liquidity cost. That being said, we see different ways to bring liquidity for assets. So you have built-in board systems and networks where directly investors can find a counterparty to trade with by posting ads on the investor portal of a defined token or on different digital asset marketplaces. And once they find someone, they can directly settle in peer-to-peer via the blockchain. So this is great because you don't need any license to operate such built-in board. So most of our clients, issuers, on their investor portals, they activate a built-in board, meaning if you want to buy a specific token, you go on the website of this token, you get qualified, and then you can find other investors to trade with. So it's quite convenient. So that's the first thing. Then we are compatible with any centralized exchange, but centralized exchanges don't bring too much value by using the blockchain. You already have centralized exchanges working well, but they provide the whole thing, as I was saying, the whole infrastructure, the compliance framework and the audience, but all of this has a cost and is very defined, and it's hard to innovate within this scope. So we are compatible with centralized exchanges, but if they use or not the blockchain, it doesn't really change anything. And finally, we see more and more innovation with DeFi, with AMMs, for example, so the Uniswap model, but for security tokens, with automated liquidity pools, very interesting. We see as well collateralization as a mean to find liquidity. So there are different forms of liquidity, new forms of new solutions, but we don't think that centralized exchanges are the future, because they exist already, and maybe they can reduce their cost and improve a bit their service by using blockchain, but for the moment it's not the case.
Okay, I mean, you are based in France. Are you working with any Euronext listed company? Is there any public listed company that is coming to you asking for this kind of solution?
Yes, so we are based in Luxembourg. I am French, as you can see with my terrible accent, but we are based in Luxembourg, and actually we have Euronext as a shareholder of Tokeny. So we are quite familiar with their challenges and opportunities, and yes, we have more and more publicly listed companies want to tokenize assets, mostly to tokenize funds and open-ended funds, so publicly listed funds, to automate subscription and redemption and all of the operations. Mostly because distribution is a bit broken for these large funds. You have a lot of intermediaries and pyramid of distributors. Now they want to digitize the whole process and basically say to all of their distributors, now you bring your audience, the traffic directly on my platform, and I will manage the rest digitally.
That's interesting. How did you manage to get Euronext involved?
So Euronext invested quite early in our company in 2019, because they saw tokenization as a way to bring an infrastructure to private markets, and they were only active in public markets at that time. So they found it very complementary.
Mark, do you have any other question?
No, I think it's quite clear what Luc said. And at the moment, he's as I understand it, the vast majority of the focus is on unquoted companies for tokenization, and it's going to take time. Even with listed companies, it might be tokenizing an asset for a listed company, but the securitized tokens, I don't think you're going to see shares, for example, in HSBC or BP or Marks and Spencers in the UK offering a parallel securitized token of HSBC shares or BP or whatever shares for the foreseeable future, because that'll need shareholder approval and regulatory approval of the existing infrastructures. I don't see that happening, but I think the tokenization is underneath it of individual assets, maybe property they own or an asset they own or something that could happen to unlock value or so on. So yeah.
So you know the company Bitpanda. Luc, are you familiar with that? Okay. So
yes.
A couple of years ago, I think probably it was a year ago, you could actually buy Apple shares on Bitpanda Pro. they were kind of like token, because you could trade them, 24/7 really.
So I don't know exactly in Bitcoin's case, but I don't think the shares were tokenized, and anyways they were not tokenized by the company itself. So you have potentially investors who can buy the shares on public market, immobilize them somewhere, and create
just like you can do an ETF,
this
which holds a variety of shares, so that can happen.
Yeah. But you need to trust the issuer of this token, and this token, if it acts as a security, you have to make sure you can enforce securities rules, which were not the case before. For example, on FTX, probably not the best example now, but you could buy tokenized shares, and you never access these tokens. You could not take these tokens out of the platform. Maybe it was not even tokenized. You could not know. And why you could not take these tokens out of the platform is because otherwise they would lose the compliance link, and they would not know who owns these tokens anymore, which would be a real issue for them.
Okay, the last point I wanted to ask, because, you said you're based in Luxembourg, and obviously before starting Tokeny, you probably have a look at different kinds of jurisdiction, and also Germany, which is making some really interesting progress in tokenizing securities. What can you share about the regulatory framework from your side that you think perhaps is looking interesting there, or perhaps maybe Luxembourg is the best place? What about Switzerland? We will be curious to know your views as well.
Yes, so when we created Tokeny in Luxembourg, we hesitated between Luxembourg and Singapore, because at that time Singapore was very active in the crypto blockchain space, and most of the ICOs and so on and so forth were in Singapore. But we saw Luxembourg as a great place for securities, and therefore as a great potential place for security tokens. And we were right, because in the meantime we got 3 blockchain regulations specifically saying that you can issue securities on the blockchain, and you can transfer them on the blockchain, and you can collateralize them on chain as well. Luxembourg is part of the EU, so it follows the EU directive. So basically what you can do in Luxembourg, you can do it across Europe most of the time. The regulation for financial products in Europe is very, very clear with MiFID and CSDR. I trust it's very, very well done. And apparently it's easier now to tokenize securities in Europe than in the US. Why? Because in the US it's not clear if you can use public blockchains or not, and how. In Europe we don't have this issue. It's clear for a few years, and now officially with MiCA and the LT pilot regime, that securities can be tokenized, and security tokens are securities. Utility tokens, stablecoins eventually can be different things, but security tokens are securities, as simple as that. And Luxembourg is a great place because it's small but extremely agile. It's actually the second place in the world with money under management after the US. And everybody speaks finance here, so it's quite easy to launch projects.
Super interesting. Okay, so Luxembourg, great. I mean, I have a business partner, and we set up a hedge fund in Luxembourg. But now we are moving more into a VC fund, so we have to kind of change the structure, and it takes a bit of time, right?
Yeah, of course it takes time everywhere, but we have many clients who started like in Gibraltar or other jurisdictions, and now they want to move in Luxembourg because it's better for many reasons. You need to find the right providers, because in Luxembourg you have large providers for large funds, etc. If you want to do something smaller, it's not easy to find the right providers. But now we know them because we work with them for years. So it's very easy to set up an investment vehicle, to bring investors, and to manage the whole thing.
Okay, interesting. And in terms of getting clients, marketing, are you able to market that yourself to kind of go after clients, or you get maybe your partners to do marketing for you, to business development, call it that way?
Yeah. So you still have to follow the securities regulations, and depending of where you target your investors.
Yeah.
So in Europe, it's quite easy, around the world, it's quite easy to target qualified or accredited or whatever the name, professional investors. To target retail investors, it's more complicated. In Europe, you can do it, depending on the countries, up to 8 million per year per issuer, 8 million euros, which is quite good already. And on top of this, you can add qualified investors. And you can do this with a light prospectus, so with minimum legal documentation. Then you can do a real prospectus. It's a bit more, a bit costly and a bit longer, but it's still possible. In the US, you will need to do a Reg A, which is very costly, quite long, but otherwise it's hard to target retail investors. In Asia as well, it's quite hard to target retail investors.
It was so great to have you on the show. Thank you so much for coming on. Thank you, Luc, and thank you, Mark.